I'm very excited because we've got a bunch of big international events occurring, a lot of national events, and we're together again for our roundtable. And where I want to tell you that there are some people who follow this thing religiously. Why? Because we are at another level. And I love TV and I love TheStreet, but there should be some place where we can get strategies for people who have some means, who literally don't know what to do. Because there are some great quandaries. I'm going to come to you first, but just a second. We got Stephen Sarge, Guilfoyle. He's an equities expert who spent more than 30 years as a trader on the NYSE floor. He's the founder of his own trading operation, Sarge 986 LLC. You should be reading his market recon column as I do, and I retweeted him almost immediately because it's so good at TheStreet. In addition, Sarge serves in the reserve components of the Army and the Marines. David Yoe Williams is a commodities and gold expert. He was an NYSE trader for 29 years, now a principal at Strategic Gold, which buys and stores physical gold for investors. Peter Tchir is a fixed income expert and the primary columnist for something that I'm very excited about, our new premium product, Income Seeker. Peter's traded all manners of fixed income products, both on the sell side as a market maker and as a portfolio manager to fixed income hedge fund. He's currently the managing director of macro income strategy at Breen Capital, LLC. Douglas Borthwick is a forex expert who correctly called Brexit, Donald Trump's win, and the change in the strong dollar policy, so you can't, triple play there, and I love that. Doug is now a columnist with TheStreet, managing director at Chapter Lane FX, a position he has held since the company's inception in 2012. Okay, so we have a very high-profile firing at the Rangers game last night, okay? In a box with a bunch of people who, frankly, have some money, and they all turn to me and they say, Jim, is this when we buy gold? When we think that there could be a replay of what happened with Nixon in the Saturday Night Massacre, when we think that there could be people calling on our own air on CNBC for impeachment, isn't this the opportunity that you just say, you know what, I'm going to forget about the seasonal period, I just have to put some gold in my vault? Or your vault.
In our vault. I would say yes, but you don't need that knee-jerk reaction. I think that the answer to that question is a resounding yes. But last month we were talking about this, and I said, oh, well, maybe be a little bit patient or whatever. Right. Gold actually ran up higher than we thought, and then now it's come down hard, and it's down around the 1220 level. We were actually talking last month at this time and said, okay, these are the levels, 1220, between 1200 and 1220, that I would buy it because that is a real dip, and that's what we want. I think we're in a long-term bull market. You get dips like this and you buy them. So the news that's out, the news that's going on, I think it all strengthens the fundamentals behind the gold play. And I think now is a good time because we're getting that dip. And so no fear by the dip.
Right. Well, is anybody feeling a complacency, not about valuations in stocks, and we'll talk about that later, but a complacency about what is happening in Washington and how there'll be another time in our lives where we would say, well, wait a second, this is just dramatic news. Instead, we're focused on Disney and NVIDIA and Electronic Arts, and the treasuries really kind of don't do anything. Does anyone feel that, wait a second, we are really wrong and we should be, this is the ultimate sell in May event, and we're just kind of just saying, you know what, I'm going to whistle past that one?
Yeah, I think it's hit a bit of over complacency. If you look, the VIX is down below 10. That seems to have, triggered a lot of frustration from investors. Some people were underweight. It seemed to have maybe triggered that bit of capitulation where people are either now giving up hedging or too into the market. Yeah. So you've got all these things going on. I think now's the time to step up and be very cautious. Reminds me a lot of 2007 where May and June, coming into June, everything looked great, and that whole summer was nothing but problems. So I'd be very cautious here.
But that's you're throwing a gauntlet down in May and June because that's when we still had your last chance to get out. So how much of a siren is that you want to give to our viewers?
I think it's a very strong siren.
Wow. Okay.
Listen, we were supposed to, be past healthcare. We were supposed to be moving on to tax reform. I don't know what happens to tax reform after the events of last night. I think the things that the market's been relying on are really up in the air. Plus, you've got China potentially weakening. You've got issues with North Korea. I just don't see why you would be careless here.
Okay, and shouldn't I just find some way right now to bet against the dollar? I mean, really double down, because you've been so strong on this.
Peter's jumping on something here about 2007, and it really does remind us of that, in that volatility is so low. The movement you're seeing in the currency markets are at 10-year lows as well. And what that tells you is, I remember 2007 sitting there, and folks are saying, look, you got to sell volatility into the summer because nothing ever happens.
Right.
Well, 2007, that's when Argentina blew up, and that's when the world fell apart. And I think that we're really on the cusp of that. Now, the problem is when you're long volatility, you're paying away decay every single day.
Right.
And so it's, you have to be right. But at the same time, this really does smell like a market that's ripe for something. And I'm looking at China right now and gold, but also other commodities that have collapsed in price.
The Shanghai has been doing terribly. No one cares right now. If it takes out 3,000, when people start saying, you know what, we got to get up again, we got to watch 9:30, we got to be concerned in the evening.
Maybe, but the Chinese use for collateral, commodities. And commodities have halved in price over the last year or so. So if the collaterals collapse, well, they're going to start selling. And they're not just selling in China, they have to sell all around the world. Right. And I think that's maybe could be what really clicks us going into the summer. And yes, certainly sell the dollar. And in 2007, you saw the euro rally about 20 big figures. You saw dollar yen come off 20 big figures. These are 20% moves. Right. So these are significant. I think that certainly you get these small movements right now. We went up to 110 with Macron's victory in the euro, and now it's come off around 108.70. But today it sat there for 30 pips in a 30-pip trading range, which doesn't really happen. So everyone's sitting on their hands waiting for Tinder to start the flame, and right now there's a little bit of smoke, but there's no fire. All
right, Sarge, you know that when you hear what these two gentlemen said, and David was actually the most calm, and I was going to just say, let's reach for gold. You got to be thinking that it is too glib to forget about the VIX. I'd still focus on the VIX. It is a little glib to be able to say, you know what, I've lost money on puts, I'm not going to go there. Which of your positions that you're talking about that you have sold, for instance, that you'd be willing to bet against?
Oh, geez, I'm not even thinking about selling right now. To be honest, I'm different than you guys.
Okay, okay. No, that's important.
The Fed funds rate going into that 07 era was on the way up. I mean, it was on the way to 5% or so.
So a difference in you're saying
so
that when we look at
there's
benchmarks,
a difference.
it's not.
And I know you look at the VIX, but I tell you what, I haven't touched the VIX in 3 years. I hedge all the time.
Right.
But I don't touch the VIX. I consider it almost insignificant. I'm not going to say I'm careless, but I have almost never been more broadly long the equity market than I am right now.
Well, go into that, because that is something that I think that a lot of people might say, what has he got? What has he got? What's your thinking that that's the right thing? And I want to ask you whether you feel like I do, that the smart money hates it as much as ever. We may not look at this, but when I listen to this Ira Sohn conference, I don't hear anyone saying, you know what, this is the time to buy Facebook, Apple, Amazon. I don't hear anyone saying that.
You know, I feel almost as if sometimes I listen to what other people say, and am I the idiot? You know, I mean, but you know what?
We've always felt that if you go long in the bias since '87, that you're the idiot. But the idiots have made a lot of money, so maybe they're not idiots.
And if I'm an idiot that makes money, then I'm all right.
Okay.
I just had an April that, by my standards, was fantastic.
With which ones really being the standouts?
Oh, geez. I mean, I took part in that Apple
right
ride.
At 17.
I took part in Apple. I took part in Amazon.
Right.
Walmart, as we've spoken.
Walmart's been so
It's
fabulous.
been a winner for me.
Yeah.
I even mentioned Walmart on CNBC last night.
No, it was great.
They all thought I was out of my mind. Even the guy next to me laughed at me.
It's finally back to where it was when he took over before he created the earnings. I like the gold. David, I want to ask you, we had a terrific analyst on last night on Mad Money, Carly Garner, who correctly said to sell oil at 53, and then it went down to 45. She wants to basically say, look, it is not bottom. This is a false bottom. I kind of am oriented toward liking oil, if only because we went down to the lower end of the range. But there's still a lot of traders who are long it. Any advice to people who are thinking, you know what, the oil stocks have been the worst performers. Oil could have a bounce here, maybe make some money.
I would agree with Carly and say that I think it could very well be a false bottom, and the reason is because what Doug is talking about, there are huge deflationary pressures, I believe, at work, and so the commodity sector is where they show up, and that deflation depresses those prices. When those prices get depressed, the tentacles go out into everything, and it's reflected in debt. And so I watch debt and debt markets quite a bit, and some things have happened. But to get to your question first, if this is a false bottom, which I think it very well could be, and we go, maybe not significantly lower, maybe down to the 40-ish range or something, like $40 range or something like that, then you got to be very careful, because if you lay on too thick and you make those bets too much because we were at 52 or whatever, and higher in the oil, then you can get really hurt over a low volatility period in the summertime. If there's not a lot of volume, if people are kind of hands-offish and seeing what's going on, you're going to be stuck with that for quite some time.
One thing on oil, because we talked about this, I think, 2 months ago. My view is that Trump is going to be very good for producing oil in the U.S., but that does not translate to higher prices. You're seeing the rig count go up. You have a lot of companies that are able to turn the spigot on. So I think we're going to see a big push towards domestic production, but I think that's actually going to be harmful and keep a top on the price of oil. The other part that has really been part of the story for a while has been the Saudis had every incentive to talk this up ahead of the Aramco IPO. As that looks more and more like it might just be bought by China, that their story and their mission is failing a little bit, I think that's going to add pressure where people realize, you know what, the Saudis can't support this going forward. We're having U.S. production going up. So we've been kind of a 40 to 55 range. I think we're going to get back to that 40.
You raise a great point, which is the self-fulfilling nature of what Trump is doing. For instance, I follow a lot of the pipeline building, and we have a huge amount of oil in the Permian we're discovering. A lot of that's because we're using very different drilling strategies, getting much deeper and having more per pad. And what's clearly happening is that you're getting quick approvals for pipelines. A lot of times what had happened was that the government would stall in the pipelines because Obama's strategy was to keep it in the ground. When you get quick approval, then suddenly you want to do quick drilling because there's a place to go with it. So I'm with you. I think oil is really capped. That said, I think the oil stocks fell so much that there might be opportunity. We bought a lot of Apache down here because we think that the Permian, their find Alpine High got completely discounted when the stock lost 20 points. But yeah,
we're big fans of the transmission companies, the MLPs, because again, we're going to have to move this around.
Because ETP got upgraded today. We like Magellan Midstream. Would you want to go oil? Do you want to go nat gas, or does it even matter? You can, and would you be willing to speculate on some of the higher yielding ones?
Yeah, I would go across the board at the MLPs. I'd be careful. The one thing I would check on the MLPs is I want to make sure they're safely investment grade. Remember what happened with KMI a couple years ago? We've got to be careful of that because you don't want them to issue a lot of debt to finance the pipeline and risk that drop to from investment grade to high yield. But I think across the board, this sector will do very well going forward.
Will you be able to, in the new product, the income seeker, maybe outline which of the more dangerous ones? Because I get a lot of calls when people say, listen, I got a chance to buy a 13% yielder. And I'd like to be able to say, look, that's too good to be true.
Yeah, I think that's a great idea. That's something we really focus on in the income seekers is the protection of income and going forward. And those high yielding assets, I think you see some of that in the muni space right now where there's some funds that are very high yielding. They should be.
Okay, that's great. I want to go to you. French election. Post-French election, we had ING reporting an unbelievable number. We had Commerce Bank reporting a fantastic number. We clearly have some demand for the euro. Can they keep rates lower, and would you be buying the euro aggressively here?
Aggressively, no, I think, but certainly I like the euro. If I'm going to be selling the dollar against anything, I do it against the euro.
You would, okay, of all the currencies around, not Japan.
Political risk-wise, you're really looking to the Italian elections, which are quite a way away before we really have to worry about politics in the Eurozone for quite some time. And normally it's politics that trip up the euro.
Right.
And so because we don't have that, that's one that I certainly like. Aggressively, the definition of aggressive, I think, is always relative.
Yeah, good
but certainly, I do like buying it here. I think the break of that 111, 112 area would mean that you should ship much more in. So I think that it's really about getting through the range we're in right now, and that 110, 110.30 after Macron came in, we hit that level and then bounced right back off of it again. We've got to get through there. Once we get through there, then there'll be much more confidence. You'll see momentum funds start to pile into it as well, and then move it forward. One thing that's certainly interesting is no one's calling for parity anymore.
No.
Citibank's taken that off the table. The other banks have all taken it off the table.
Remember how that was? We would just presume
since
that
2007, parity was always a story from every bank. They've all changed their tune now, and that means now you can look to the upside. And the upside looks very, very good compared to what we're seeing in the U.S. Now, will they raise rates? They won't raise rates, but I can see them certainly getting rid of accommodation and moving away from that, just as the Japanese are discussing that as well. So every time if the Fed does raise rates 25, well, there'll be an accommodation statement coming out from the ECB that'll cancel out the U.S. move. So you shouldn't be worried about the interest rate differentials when it comes down between the U.S. and Europe, because Europe will catch up in the end.
All right, now, Sarge, you still own some of the banks. I see you did sell some. And after you've listened to that, what are you thinking about interest rates? What do you think about the 2 hikes? What do you think about the 10-year? Actually, I'm going to go around and ask everyone the 10-year. We're going to start with you because you have owned some banks that would do fabulously if we get those 2 rate hikes.
Oh, yeah. And the Fed has made their intent clear. I mean, no matter what the macro says, these guys line up like ducks in a row and they tell you how fabulous it's going to be and that we're going to raise rates, not only in June, but probably by September or December. So, like I've told you probably 3 months in a row, I like KeyBank.
Key had a magnificent quarter.
It's going to hit 20.5 or 21 one of these days, and I'm not going to sell it before it gets there. I like Citigroup. Citigroup I actually changed my mind on a while back. I like them on valuation. the stock is probably the best in class at this point. I've sold JP
$64
Morgan.
tangible book.
JP Morgan, I took a profit.
Which you got to tell me, was it just for profit? Because they had a smoking quarter.
It was just for profit.
Okay.
I felt that was too heavy in the banks. I had to cut something.
Right.
So I got rid of JP. I got rid of Bank America, BSA, which I'm not sure was the right move. If it gets back in the 23 and a quarter, 23 and a half range,
Just go back.
I'm probably going to buy it. I would like to get 26 for the stock. If it hits 26 before it hits 23 and a half, I'll probably go the other way on that name.
Okay. 10-year, just give everyone where you think the 10-year will be, say, 3 months from now when we convene.
I'd rather answer this question after the auction this afternoon.
Fair enough. Fair enough.
I do think that we'll probably have a 10-year somewhere between 2.6 and 2.75.
I mean, I have to tell you that every time I ask this, people come in much higher. I've not heard anyone other than Gunlock say 2. Really? Okay. All right.
I've been listening. I'm becoming more contrarian. I didn't realize I was this contrarian to you guys. When I'm hearing different things, I don't like the banks because I think when the rate hikes come, the banks are going to have other issues, and it's going to be worse. And in April, we talked a little bit about, I talked a little bit about debt and what was coming. We were talking about the debt ceiling being raised, and I saw some debt problems. Since that time, Puerto Rico has declared bankruptcy or virtual.
Which all the
they're in
smart
default.
money told me, buy them at 70, you're going to get par.
No one is talking about it. It's just it's a news item. It's whatever, but it's not a big news item. That's $70 billion worth of that should never have happened, and we didn't think it was going to happen, and it's not backed up. So that's a huge problem. The Canadian, it slips my mind right now. The big Canadian mortgage company that $2 billion down the drain, and so 2 or 3 other big Canadian mortgages are big problems. When we're talking about Europe and the euro, I said you're going to sell the dollar and go into euros. Sell the dollar and go into gold. You're better off because the euro, Draghi's still printing $250 billion and passing it out all the time. Those kind of issues are coming to head, and so. I talk about, we asked me about gold if I'm excited. I talk about kind of a slow summer because summers are usually slow in gold. But the problem becomes this. Come September, all bets are off the table because we hit a debt ceiling limit. We have a new budget in Congress. Nothing is happening. We've spent a ton more money, and all of a sudden these fights are going to come. They're going to be very, very real. And I think the debt overhang is going to be tremendous. I think that they're going to fight it out. I don't think the banks are going to benefit at all from that. They're going to. It's going to be.
It could go under to it. If we just
that's
are
what I'm
stalled,
looking.
No stimulus.
No
whatsoever.
stimulus. I'm saying it's going to. You're going the other. I think we're going the other way.
Under your apocalypse.
By default.
guys
By
agree?
default.
Yeah.
But
Well, but this is really important. I'll tell you why. Because even 2 weeks ago, or when we realized that they had the health care bill through the House, we got another wave of enthusiasm that something could happen. It sounds like that is a false hope.
For me, I think we're 225 to 250 on the 10-year. With more risk, I think, to the downside. We're not seeing the economic growth. Atlanta GDP now, which did a very good job with Q1, started, I think, this quarter over 3, and it's been downgraded twice already. I think we're going to see this continued flattening of the yield curve. So the Fed can hike the front end, but I think the back end is saying, we don't see the growth. We, in fact, think the Fed might be acting too quickly. So you're going to see flatter yield curves, which I don't see as being that good for the bank. We've had this big disconnect for the past probably 2 months where treasury yields are low and equities have been high.
Right.
I think that's going to resolve itself fairly quickly, and I think the realization is going to be the fixed income markets were probably right, growth isn't there, and equities come off a little bit.
Well, let's talk
And you're
about that
seeing in the
because
Russell.
I sometimes keep thinking, well, listen, if I have to put money in European bonds, I'm just going to say, listen, I'll go to my chart, to the people who control the charter, and say, no, I got to be in U.S. I cannot be in these European bonds. But what you're saying is basically, no, bonds are true, regardless of the flow of funds.
Positioning-wise, every macro guy you go out to right now probably is short the 10-year. And they're expecting that to go, the yields to go much, much higher.
Right.
I look at the CRB index versus equities. Now, if I was going to be selling fixed income, I'd want the CRB index to be moving up.
Right.
But it's going the complete opposite direction. You get equities going one way, so that's the expectation of growth. You get commodities going the other way, saying big slowdown coming. In my mind, you're looking at 2.3 to 2. I'd go closer to the 2, given I think there's so much event problems in the horizon. And given where the VIX is right now, It just seems to me that the complacency is there, where it's much more likely to see yields collapse as opposed to go higher.
Well, no, anyone think that copper's about to break down? Because I know it's at a critical level. Because we know some stocks that we would short if we felt that copper's going to break down.
I think copper's been beat up for so long now that I'm not sure that's going to break down.
Okay.
But there are interesting things to watch. In the gold space, we always watch the junior miners and then the miners to think that the gold they would take off before the price of gold would take off. You were talking earlier about oil, and you're saying, okay, buy some of these oil stocks because I think that dynamic is switching. It's certainly switching, I believe, in the gold market where you have to say, okay, watch the price of gold before you buy those miners because those miners aren't going to lead now. The commodity is going to lead, and I think that's going to be the same in oil. I'd be very careful, and copper, those kind of things. I think I would watch the commodity before before you jump into the stock.
Okay.
Watch the commodity.
Fair enough.
Part of this on the commodities, we believe, is Chinese were using this as a store of value, a way to hold dollars if they couldn't hold dollars. I think with the weaker dollar policy, China doesn't have that need. So I think people are selling this as part of, hey, we don't need to hold a dollar type asset. So you're seeing that come off. And if anything, you're seeing the flows move into things like Bitcoin, where that's become, I think, the store of wealth for offshore individuals who can't participate.
I'm so glad you brought up Bitcoin. I am asked every minute. I know what I know, and I know what I don't know. I never comment on Bitcoin. You sound like a believer.
No.
Okay.
I think it's out there. People are using it as a store of value.
Yes.
I have one theory. The people who understand Bitcoin and really understand, they're at another level of smartness. So I'm not sure I completely buy into that it's unhackable or not. The other thing that this strikes me as very reminiscent of what's going on in the credit markets is every time we launched one of these new CDS indices, it preceded an immediate crash. Whether it was the IG index, whether it was the Western sovereigns, whether it was the ABX, which of the Big Short fame. So here, all these people are trying to create Bitcoin ETFs. And part of me is so people can get a borrow on the equity and short Bitcoin through the ETFs, because there's really no effective way to short Bitcoin. I think they open up these ETFs. That creates an ability for someone to do that. So I'm not sure that this is a great long-term play. I can see the value to fooling around with it, but I would be very hesitant to put much more than just a pure spec number into that.
Volatility, the amount of volume you can push through Bitcoin as well is very limited. I think that what you do see is you see bounces in Bitcoin where it goes up 20, 30% whenever there's something going on around the world. So let's say there's China, and people in China told you can't get money out and put it into dollars, so they put it into Bitcoin. Venezuela right now, issues there, guess where they're going to be putting their money? Bitcoin. Because it's a certain way we can get around all the rules and you can manage to purchase something and put dollars into something.
Which you worry about being seized, right?
Right, well,
I mean,
there's a lot of rules about
34,
gold. There's a lot of
right?
rules about gold. There's not a lot of rules globally about
So
Bitcoin.
we've actually were discussing that this weekend. I was down in Florida with the guys, and it's an amazing thing. Bitcoin's at all-time highs, and gold is coming off and was falling, down from the 1,300 level down here.
Isn't that a level of faith?
It's lunacy from our reasoning. It's absolute lunacy.
If the Chinese government comes out and says, you know what, we don't allow Bitcoin for this, this, or this, it drops 10, 15%.
That's a really
like
good
this,
point. And why
overnight.
wouldn't they? They're sophisticated. They see this happening.
Right. I mean, and so the bid offered is.
Speaking of China, they just announced, well, they're talking about this new Persian Silk Road type thing, right? Another possible infrastructure plan.
Right. A gigantic, building a whole new city.
Now, if they go and do this, then all these theories about commodities change completely. I mean, then there's a bid underneath commodities. Industrial
you're talking
commodities.
about your bid on iron.
So we're talking about
because
copper,
iron,
steel.
I felt that iron peaked and forget about it.
And so that whole idea changes until later on when we go through this again, because they built another city, another highway, another airport.
How do you pay for it, Stephen? So if the Chinese are more indebted than almost any nation in the world, probably outside of us, maybe more than us now. So there's a certain point that you have to say, wait a minute. How do you pay for it? So they might put a bid under copper or a bid under any kind of aluminum or iron, but there comes a point where we want money.
You are right.
What is that money?
One day there will be an apocalypse, and we will have rampant inflation.
They still have treasuries.
You are going in the right direction.
I'll tell you. Let me give you the last word on Bitcoin. About 5 years ago, I was in Goodwife, and I was an expert witness, and they asked me about Bitcoin. And my lines were that this is the greatest, $200, this is the greatest investment ever. And anytime anyone asked me, I said, go to the table. You don't need to worry about anything else. Let's talk employment for a second. We have great employment versus a lot of other weak indicators. And I've always, as we talked about what's true and what's not, I have always accepted employment, the numbers, as being real. Is there something wrong with the employment number that is out of sync? Or is this the Amazonization and that we look at retail sales?
Do you really consider them real?
I consider it real.
Oh my goodness, no,
I do
Jim.
consider it real.
No,
Oh my God, what am I?
The unemployment numbers are not real, Jim.
Well, they're real relative to each other.
They're relative under an archaic system that incorrectly measures
Look, I went
labor
to
market health.
I went to the labor secretary. I said, listen, you should use Salesforce.com. I mean, that's what they should use. I mean, somebody who actually tallies, right?
Right.
Instantly tallies.
I mean, unadjusted and without the rules that separate those guys and gals who are unemployed for too long from those who aren't, the real unemployment rate is probably about 5.5%, and the underemployment rate, as measured by Gallup, which isn't controlled by the government, is 14%, not 8.6%.
People agree?
Yeah.
I agree thoroughly. I think, and the job, I mean, just visiting around, we were down in Florida. I mean, waiters, waitresses, security guards.
Right.
Those are, I mean, I'm sorry, but that's not great employment.
The $100,000 jobs have been lost, and instead they have a $30,000 job.
Absolutely.
Not even
only
30.
thing I'll
It's
say-
$9
Which is
an hour and they
contributing
keep you under
less to
30
the
hours,
economy.
right?
I'm
than the
happy to be
100,000.
negative. I'm usually negative. The one thing I think we get us stuck a little bit in this area, particularly in the finance industry, where we're kind of going through the throes of all the electronic. You start moving away. There's weird little pockets of the country I think that are doing well. You know, anecdotally, we're talking to some lawyers who do a lot of housing in Michigan. That's been picking back up. You know, Detroit's scraping off the bottom. So there
some base
are.
there.
Vulcan Materials this morning on aggregate Southeast, parts of Southeast doing quite well, but that's building. That's for real.
So I think-
and there's credit there.
I just think that still the employment numbers are realistic. There's pockets that are doing well. The problem to me is still the reasonably high earners, not the really high earners, they're safe. It's the reasonably high earners, the middle income. I don't think people are feeling comfortable yet. That
Even
this
though
truly
when you hear
have-
everything, whether it be
they're not
healthcare,
comfortable.
whether it be the not all, the LLCs.
Look at consumer credit, revolving credit. You think they're comfortable? They're not comfortable.
right, and you're starting to
They're
see a
not
turn in auto loans.
Right.
There's
Auto
something
loans
wrong.
is anyone okay? Student loan, auto loan. Any way to short either one?
Not yet, not effectively. I think there's been talk
You
about.
don't need to just
Buy the
gold.
VIX.
All right, I got a wild one. I got a wild one from left field I want to give everybody because this is something I want to make money off of. Brazilian inflation 10-year low. Okay, 10-year low. Is there a way to make money off of anything Latin America? Because Argentina turning up, Colombia good, and I don't want a bank name. I want to know what anyone's thinking about Latin America. We are seeing up numbers for the first time in years, Latin America. Anything.
We've had some clients, but that's been very structured debt. But
Put
there
it-
are
okay.
inflation-linked products. So just like we have our tips, some of the countries, Mexico certainly has some inflation-linked bonds. Those might be worth a look where you can pick up some inflation. If inflation starts picking back up, you'll get that benefit. So just like the tips, Mexico definitely has them. I believe Brazil does. I'd have to double check
I
that.
still want to buy the peso. I still think the peso's undervalued.
The Mexican peso is undervalued, and just last night you had the Commerce Secretary Ross came out and he said, look, it's not that the dollar is too strong; it's just the other countries are all too weak.
Right.
And really, he was pointing at Mexico and he was pointing at Europe, and Japan. And so, dollar Mex is trading around this 19 level right now, and it went down to 1880, I think, last week. It was up to 1910 overnight.
Right.
But it's trading back and forth around these levels. But certainly, the U.S. wants a lower dollar versus the Mexican
Yes.
peso. Mexico is doing a lot better than what's priced in, and I think what's priced in right now is fears of the wall and what's
Right.
the U.S. going to do. But the U.S. wants a lower dollar against the peso, and he effectively said that last
So
night.
wait, you can buy EWW? I mean, let me tell you, I've been down in Mexico because I want to buy something peso related, and everything I buy in real estate has to be in dollars, which just kills it. It just kills it. Is there anything peso related that we can buy at a 10-year? Dangerous. There's no liquidity. There's no liquidity in this.
Not on a
stuff.
retail basis.
No. I mean, I just think maybe the EWW, but I always get worried because the earnings aren't so good. You're really just trying to buy that peso, isolate it. Just go and buy.
Buy peso.
Buy 100, whatever you're allowed to buy from a bank, and just go buy pesos. And maybe that's the way to do it. Go to a lot of, I don't know. I mean, I don't know how they're going to try to regulate it, but I agree. I think the peso is fantastic. Now, let me throw out another one that is hard to do. North Korea. I've got a lot of friends who say, you know what, Jim? When you talk about the VIX, it's as if North Korea doesn't exist. Very hard to hedge on North Korea, right?
Well, North Korea, so on the currency side, you've got obviously Japan, and there's a risk in Japan, and some would argue, and I'd certainly argue, that the move up from 110 to 114 is on the back of Japan now doing nuclear drills for school children. So given that's the case, you also have South Korea, you get Seoul, and it's right there within missile distance. And so, certainly, but dollar Korea doesn't actually move on the back of that.
Samsung is so strong? It's just a great company, right? I mean, stock is unbelievable.
This is a very binary event. If a nuclear bomb was sent from North Korea to South Korea, well, you don't really worry about your positions.
You want to know how to hedge that?
But
This
I
guy.
still worry about it. I would
gold.
buy gold and keep it with you, not in my backyard.
And that's where Treasury. Oh, sorry.
No, that's absolutely right. We just say, okay, you need to have something that is, and that's where the counterparty risk comes into play.
Right.
If gold does not carry that counterparty risk, it is yours. It's not attached to anything else. It's not attached to anybody else's.
And another great reason not to buy the gold stocks, frankly, because they could be linked.
Because
to it.
you were talking about South American stuff. Well, we just finished a gold conference here in New York, and it's interesting. I mean, there's a lot of mining going on in Peru. There's a lot of mining going on in South America, but people are still hesitant because we think the assets are down there, but you still have government. You still have all sorts of different problems with actual mining and running those companies down there in those countries. That the myriad of different problems. So it's hard to you were asking to play that. You almost want to because there's opportunity there, but you got to be. You really have to know the space.
All right,
You
last
really have to know the
impossible
space.
one that I want to make money off of. I think Venezuela is just going to collapse, okay? Any way to make money on the complete collapse of Venezuela. Would it be like they can't pump as much oil? They just confirmed again they can do 1.5 million barrels. Is there anything we can do on some of these impossible situations that you actually have some pretty interesting ways to get involved?
I don't have one for
I
Venezuela.
don't even want to be involved in Venezuela.
On the short side, no, because it's too crazy?
Too crazy. I don't even.
It is too crazy.
There are
I
rich
think
people there who are trying to take money out.
They're fighting over canned beans in the street.
There's an NDF that trades in Venezuela, but it never trades.
Okay.
So there's a price. The bid's here and the offer's here. No one will ever pay the offer or give the bid.
Okay.
So there are markets, but the markets are. I always thought there'd be a way where you could essentially be in Venezuela. You'd have oil. You get the barrels of oil, get them over the border, sell them, get the dollars, move them back into Venezuela. But I think it's so locked up that you can't do these types of things.
All right. Now, last week, I had a good sit down with Tim Cook, CEO of Apple, and he wants to talk India. And he's just saying 2020 India, biggest market, talking about the liquidity in India, talking about the opportunities in India. I want to make money off of India. Anybody?
I think.
And by the way, they love gold. In what
gold.
season? In what season do they buy? The jewelry season?
Yes,
right?
in their marriage season, right before their marriage season. Right. And that's why in the fall, it's fall, and it's a big time for gold in the fall. India actually, when it comes to gold, India actually has less gold in the first quarter than they had last year. They bought less and it has to do with the money and the money constraints. They're trying to go to some cashless society and all that kind of stuff. So India is a very interesting play because there are so many people, and you think it's the next China if they move into that phase. For any kind of stock, any kind of like Apple going in there. Right. The problem with them is it's their government. It's extremely controlled, even though we don't think it is, and or you don't think it's as much as like some communist regime or something. So you got to be very, very careful because they can pull something like, okay, we're going to a cashless society, overnight in their government, and what does that mean? What are all the repercussions? It's an interesting.
Makes them a natural fit for Apple Pay.
One trade you find with the emerging economies is that when they do start to emerge, certainly airlines become much more important. When China started to emerge, everyone started flying out of China, going on vacations. Right. It was never happening before. In India, my guess is there's only a couple of airlines there. They might be very interesting to look at because these guys are going to start vacationing a lot more.
That is the great middle classization. That's what Apple always associates the travel with the phone. That's what you start seeing first is travel, and then after travel they buy the phone. That's a really good call. I've got to do work on that. I wonder if
some of the big global consumer product, Cadbury, something like that, might be an interesting way, right? If they're really going to see that income start growing.
Who's big there is Coca-Cola, and they got a new CEO coming in. You got a decent yield. The stock acts great. Not a lot of volatility, but at the same time, I mean, Geez, you can put that one away. But
I like
CEO.
Quincy. I think Quincy has.
I think he's
I
very
think he's got
real
it
new
going on.
CEO.
Yeah,
Very, very real.
Yeah, it pays a dividend too. Even if you're wrong, you can get something for it.
All right, I got to give another one that people ask me about every time. That's right. And I've got fixed income ways to do it, and I've got ways to be able to say it's a fraud. I got ways to be able to say it's going to be the greatest thing since sliced bread. Tesla. There's a convertible piece of paper. Okay. Now this convertible got a lot of hype at this Sohn conference. To me, it's a way to be able to maybe hedge, and maybe that's what people are doing because the short position is so big. What do you do with that convert?
I think you still have to believe in the story.
You do?
If the story's right, the convert's can be fine. If the story's
you.
not,
Good. I mean, this is a controversy that I want.
so I don't have a strong opinion on that particular company. The convert's not a panacea. It's not going to solve anything. It's not. It's different than some of these other companies that have come up in the past, like Valiant, which has a big, robust debt structure. This reminds me much more of a Bob or something like that. You're still basically buying the story.
I can't believe, by the way, that Valiant was so smart in refinancing at a level where you don't have any near-term milestones, which is why that stock was a decent call on the situation, which kind of shocked me.
Yeah, we've had a couple guys starting to look at a bunch of those types of high yield type names where the stocks have come off pretty heavily. They're big hedge fund favorites. Where I think you're supposed
How about
to
some
start
names? How
looking-
about some names?
That I can't go through.
Okay. But can you give a sector? What kind of sector? You
Some of the healthcare names.
Okay.
Certainly some of the industrials where you've got a lot of debt outstanding, so the equities come off, but the debt looks very stable. So the debt was part of the problem. Now that the debt's stabilized, the equities haven't responded. So you've got big turns of leverage where if this company turns it around at all, the debt goes out of play. I think the equities, I think you want a basket of these. One or two will probably go wrong. But
Okay.
you start picking a basket of these where you've got that big operating leverage and you've got the debt situation handled.
Okay, I want to go back to North America. There are times when I think that Canada is in breakout mode and that something could really go good there. There are times when I think that you just shouldn't even be thinking about Canada, but we did have that bit of a trade war, and I'm trying to figure out whether there's something to do Canadian dollar, given our president.
Canadian dollar, same NAFTA trade as dollar Mexico, in that you want to be short dollars against Canada. However, there's a couple of things brewing there that don't add to that position. Certainly, a weak oil price is not good for Canada.
Right.
And then the second thing is this mortgage situation. Folks talk about how overbought the housing situation is in Toronto.
Yes.
And then you see a couple of mortgage companies start to have some difficulties on a financial basis. Well, that makes you have pause about buying the Canadian dollar. So I do like dollar Canada much lower. However, I'd much rather be short dollar Mexico than dollar Canada because of these two situations. If oil starts to rally again, then the oil sands become profitable again. That's very positive for the Canadian dollar.
Where do they got to go, the oil sands, to be profitable?
Oh my
Where's
God!
oil gotta- it's pretty high.
90
Yeah.
to build a new one. Greenfield is $90.
But you do find just as oil drifts up through 50 and then 60, dollar Canada comes off a big figure, a couple of big figures. It certainly trades with oil, much as like the rand will trade with gold.
Well, Sarge, I wanted to ask you because you like the bank. I mean, I listen to this bank situation. You know that the Canadian banks are very conservative, but nobody wants to own them. They are not as exposed because they're not allowed to use as much leverage. I don't know. I mean, I kind of feel like that I should be looking in Canada for equities. I'm just trying to find something that is not dollar.
Toronto Dominion, I mean,
Yeah,
take a look
might
at
kind of
Sink
interesting.
or Swim, whatever that is.
Hey, you know what I've been looking at?
Spend too much time extrapolating what happened to our mortgage and saying, oh, Canada's the same. The banking situation's completely different up there.
I've been looking at the VGK. I've been looking at trying to get European exposure with equities and have the euro because, again, I am more concerned about this administration than other people. Now, maybe that's because when I get asked more about it, but I just feel like that I just want a little more overseas than I traditionally have had for my charitable
That makes
trust.
perfect sense.
Right?
I mean, the foreign markets are outperforming. Foreign
Yes.
economies are outperforming our own economy right now. I mean, that's simply why the broader indices are doing better than the Russell 2000. I mean, it makes sense. And that's why if you look at your own portfolios, your better performing names are probably the ones that have 40 to 45% foreign exposure.
And you know what has that is really interesting, and I know just for the equity people out there, is Alphabet. Alphabet's got about 45% foreign. And remember, they don't have China, so you're really talking about Europe. They have great European business. They had a fantastic quarter. I spent some time with them recently. They are driverless cars. I mean, we have to accept the fact that there are revolutions going on. Obviously, I would love to have a driverless car, not an ETF, because they created so many ETFs. I want to ask about too many ETFs and what it means. But I do think that there are big themes out there that I want to just own stocks in, and Google Alphabet fits all of that because it's very international and it's going very, very fast. It's way ahead in autonomous driving, and it's just got great data center. I don't know. It's one of my absolute favorite
It's a tough name
stocks.
for the home gamers, though. I mean, you got,
Very
what are you
tough
gonna buy,
name.
a share, 2 shares?
Very tough name.
If you want to go into the driverless cars, you go to Intel for the home gamers. You can buy 100
Well, because they
shares.
bought Mobileye. I did think that NVIDIA, which has a fantastic quarter, really, really unbelievable in terms of driverless.
Kurzanich, is that how you say his name?
Yes, Brian Kurzanich, he understands. That's why I bought
tells a
Mobileye.
believable story.
I think so. It's an inexpensive stock. All right, so Warren Buffett has his meeting. It's really incredible to me. Warren Buffett has that weekend, and then we forget about it. Any takeaways from that weekend in your world?
He didn't really go on to currencies at all. So
Yeah, why
for us,
doesn't
it's,
he? Is he just a domestic guy? I mean, obviously his outfit's so sophisticated, that can't be the case.
I think he gets into international things when he sees a company going under, and he can get a nice deal when it comes down to the financing of
Okay.
it. But in terms of how he does his business, given it's really U.S. insurance based,
Right.
it's not really something he gets involved in.
Right, it would be counterintuitive. It would be way out. It wouldn't match.
Right.
Right. Anything in your takeaway?
Came away this time less positive to me. I didn't get the sense that all of a sudden everyone was coming out of this weekend meeting saying, oh, we have to buy stocks here, which normally to me it seems to be a kind of a bump to the market. Oh, Buffett's saying, it seemed very subdued.
You know, it's interesting you say it because he's not buying IBM. He's not talking about buying any more American Express. He's selling Wells Fargo because he had to. Apple, he wasn't really clear whether he was buying or not buying. You're right. I mean, I would have loved to say, listen, we're in there buying. I can't tell you which names. He did not say that.
Well, he talked about what he missed.
Yes, he sure did.
Well,
Didn't
think about your own performance. When you have a lousy month or two, you don't brag about it, right? Well, he had a lousy year.
Well, I mean, what can you say? I mean, I always hate to criticize him, but he has that core portfolio that is really not to be loved. I mean, American Express turned out to be a loser to MasterCard and Visa. By the way, they're winners in India. Coca-Cola may be making a comeback, but he should have done PepsiCo, you could argue. But his basis is such that he doesn't want the taxes.
I think he's at the stage now where he's had such a great following and everything. There's so many people that do follow him. So I think it's really hard. I think he's just going to become more and more conservative in his speaking as you go on. So you're going to get that kind of subdued.
Hence
atmosphere.
the index fund
Yeah,
emphasis.
You're just going to
don't do what I'm doing. Do the index fund.
right, and just kind of.
How bright is Charlie Munger at 93?
Well, he did say some pretty good things about healthcare. Even though he says, listen, I mean, I say bright in that he knows it's out of control. I mean, I'm not saying he offers a solution, but he is involved, and I think that healthcare remains another one of the reasons why I am less bullish about the U.S. than he is, because I just think we do not have a handle on that.
It's impossible to fix.
Impossible, and it's going to take the whole year, I think.
Yeah. Back to the one question you asked about the ETFs.
Yes.
I think my head hit the table when I heard the SEC is now approving 4 times
Oh,
leverage.
let's
tests.
talk about the danger of that, okay?
Oh,
So there are a lot of
I
people.
did hear
There are
that.
people out here. There are people who are watching this who are saying, you know what? I have a good feel for the market this month. I got to go buy one of those. How wrong is that?
I think those are just awful products. They have this churn that basically eats away. And if you are right very quickly, they work very well. But you have to be right within days or months, especially some of the short products. You read the prospectus, you know, the VIX products, all of them actually, if you read the prospectus, the long and short ones say, this is not meant to be held, losses could accrue within days. And people don't read that because I think the excitement of, oh, I can buy something, stock's up 2%, I'm up 8%, yay. These are not good investing strategies. I think there's better ways. If you really want to speculate that way, open a futures account, get yourself properly able to trade the futures directly. These products, I think, are fraught with structural issues. I just don't like the leverage products.
Anything to do currency in these?
Well, leverage is a currency thing.
Right,
So if you open up a currency account back 3-4 years ago, you could do 100 times leverage.
Right.
Now I think it's down to 20, but still 20 times leverage, it's a lot. And if someone puts in $100,000 and moves 1%, they're losing a lot of money. And so the more leverage I always see as being that's not really a positive, it's more of a negative. I'm much more in the one-to-one trading style.
For traders, who makes money off of these things?
Firms.
Manager.
Sell-side firms
So
and managers.
that's what it is.
You're talking about, Peter. Those things are designed to sell and make money, and I think it's almost a scourge on the industry. As after all these years, they initially fantastic ideas. Try to limit risk or distribute risk. That is not the case right now. I don't think.
Are there hedge funds that just play in them all day? I mean,
absolutely. Absolutely, there
If it's
are.
not your money directly. Why not?
I'm just not sure.
Yeah, right.
Wow,
I
what a
mean,
sad thing to
I've
say.
never bought or sold a leveraged ETF
And for
in
some
my
of
life.
these ETFs, right, every trade in a stock generates 10 other trades because someone buys a
Right.
stock that's in one of these small ETFs, that pushes that price up, which makes the ETF basket now look cheap. So they go sell the ETF. They're in and around. So I think it's dislocated. We're spending a lot more time trying to look at these small ETFs where, say the banks, right? XLF, great, well represented.
Right.
You can trade that. Some of the smaller ones, it's represents a huge outstanding flow to these small banks or in these ETFs. I think people trade these smaller ETFs. Oh, I'm buying a sector. You're not really. You're buying these individual companies. You have to get back to understanding that. So I think we're fraught with a lot of difficulties.
Yes.
I think too much of the free float of some stocks is held by these ETFs. So we've lost sight of what was the underlying company. I think it's a problem waiting to happen. I like big beta ETFs. I'm less convinced that these smaller ETFs with the leverage are
There's
helpful.
also these ETFs that are very liquid, but the underlying is completely illiquid.
So how's that happen? Just explain that to people who are not as attuned as you are.
I wish I understood it probably as much as Peter.
Well, no one's
It's done with futures. What is it?
you get all these high yield bonds that are covered by an ETF, and the high yield that used to maybe have 500 traders, and now there's maybe 30. So the liquidity is not there behind it.
Listen, this is what you do for the person who's watching this, who doesn't know what to do, all right?
Right.
Stay away from most of these ETFs. Instead of opening a brokerage account, open 3, 4, 5, 7 brokerage accounts. Define a mission statement on paper for each and every one of those accounts and approach them all differently. You can have your swing account, your long-term account. You can have an account that focuses on a certain sector or a certain type of industry. This is how you focus if you have the time to do it. Now, if you're working 50 hours a week, it might be tough. But if you have the time to focus and the energy, this is how you actually end up being somewhat more successful than you were at approaching this game.
Well, let me play devil's advocate. Heaven forbid something happens to you. I mean, I've always felt that you got to be able to put your assets on one piece of paper for your kids.
Okay,
You
so
still
own them
can-
all at one brokerage.
Okay.
If
Okay,
you're at
so-
E-Trade
okay.
or Ameritrade,
So in other words,
open-
you can have them at the same
open
one, but
7
have
accounts
separate
at E-Trade.
and
Or-
label them so what you know.
And
Okay.
you have it written down on paper, so your wife, your husband, your kids can, if you disappear, they can say, okay, well, look what Dad did. Okay, he's got this going on.
All right, good. Devin, I'm going to go to you. I have found 2 ETFs that I do like junior and senior gold because there are always, first of all, people come to me and say, what do you think about this particular gold stock and some Canadian $3? And I always say, listen, I forget it. It's way too, but if you really believe in that stuff, there is a junior gold. Is there validity to the junior gold index?
Yes and no. So we're going back to the same problem of the liquidity. In the junior golds, they actually, one of the largest components of the junior gold index is the seniors. Yes. So it's made up of 4% because there's not enough liquidity. There's not enough liquidity in the juniors to handle the volumes. And so part of that index actually is seniors. So, and then you get to the GDX, and then you get your senior miners. So that's where you have to be careful because sometimes you don't really know what you're buying. So there's all sorts of stipulations in these ETFs and their prospectus and how they're laid out. So you really have to understand them, and that I believe is a huge problem because people buy them because somebody tells them that, okay, well, let's go buy the junior. So you go buy the junior ETF. The largest component of that is actually senior miners.
Well, that's
So
just
and that's
crazy.
a 4 or 5% component of that. So there's all sorts of junior miners in there, all sorts of different individual companies. But you just have to understand what's really in those things, and it all is based on liquidity and how much they can.
Look, I think that there's a natural bias to have instruments, which is really unfortunate. There does not seem to be a bias to be able to say, you know what, we have everything we need. You really got to prove it. Like the FDA. I mean, the FDA is like very cherry. They do not let everything through because they're worried about what it does. The SEC seems to say, that's a good idea. That's a good idea.
Right.
And buyer beware. I mean, everything is caveat emptor. And I think that what you just said is really important because a lot of people would say, you know what, I want to reach for that and not realize that it doesn't have any of the effect that you want. And then you start getting angry or you say your broker doesn't know what he's doing and you miss the trade.
We'll never blame a broker.
Right. Never.
It's on you.
It is on you. No, it is.
If you
It
screw
is.
up, it's on
I
you.
totally agree with that. That's what I
would
learned
say
from the hedge fund.
It's a worthwhile exercise for anyone who holds ETFs, particularly levered. Go to the websites. The websites are almost all great. You can pull
Right.
up the holdings. They have to tell you what the holdings are. Take a look. And does this actually match what you
what you
think
want.
you have?
Yes.
And if it does, that's fine. And if it doesn't, I think then you reconsider. I think it's an exercise that people are supposed to do. And we're coming into what's supposed to be the slow summertime. Go through your ETFs. Double check. Do they really represent what you think they have? And if not, it's a good time to shuffle your portfolio. And I'd be very cautious of anything that has leverage in it.
It's great advice. Just great advice. Guys, everyone's mentioned the slow summer. I mean, now I'm starting to get nervous because slow summer means Sleepy Friday, means some Fed official gets on Sirius satellite radio, says maybe we got to take rates up 4 times. Slow summer means no liquidity. Really think it's going to happen?
We have a slow spring, don't we?
Yes, we sure do. Holy cow.
So, and at lofty levels. We just had a great earnings season, 3rd positive earnings season in a row. Yet, we sit here at high levels in equity markets anyway, wondering what to do.
So I think it's very interesting because I actually think it's probably going to be a slow summer, but that doesn't mean that we shouldn't prepare. And so we're all talking about things that could happen, may happen, have happened, whatever. But the urgency, you asked me about gold, the guys are talking the hockey game last night. I'm like, I don't think that urgency is necessarily there, which does not mean you shouldn't do it. Right. So you should like Peter's talking about, check it out, do your research, take your time, and this is the time to do it. Say, okay, and you got a little bit of time, a little bit extra time to do this in a slow summer. Do that research, because when it becomes urgent, you're not going to be able to react that quickly.
And I think 2015 was a slow summer. We had China devalue.
Right.
I can't remember the exact year. U.S. got downgraded during the summer. 2007, all the problems leaked out in the summer. I think summer's a particularly dangerous time if we're complacent because there is less liquidity. You've got more people out. People have, sell first, react later. So
does people out mean anything anymore?
I do think
I
it
can
does.
trade from the beach. I can trade from a mountain.
That's an interesting question, because there was people out was that you're offline, but you're not.
Nobody's
off the grid.
offline.
I think
You wake up at 2 in the morning, you know what the futures are doing,
Well,
don't you?
maybe for equities, but I think that any OTC product, when there's more junior staff on board, it means that the gapping is going to be a lot greater.
They're still
I think
calling you when they don't know what to do.
This is a spring of prepping, in my view, and you should be prepping for what I believe will be some events over the summer. I'd much rather have set up positions right now for a market piece of information that's going to change things to the negative, just because it smells so much like 2007 right now.
But then again, the Fed funds rate is different, like we spoke about.
Fed funds rate is different. It means
And
there's less room.
Are you going to short this market ahead of the Trump tax rate cut that seems, seems so distant, but you still don't want to be short ahead of it?
I think that we know that whatever is suggested by the administration right now probably isn't going to get through the House and Congress. It's not going to get through Congress. So given that, we can hear these great big stories, but what's going to come out the other end is going to be very watered down and diluted. And if the market's pricing in the big potato and not the dilution coming out the other end.
But they're not pricing in the big potato. They're working their way towards it.
I think when you look at the all-time valuations right now that we have in equities, I think they are pricing in a lot of big potatoes.
Forward-looking PEs are down from where they were.
They're down, but they're still extremely.
17
But not against treasuries.
I can deal with 17.5 PE. I can live with that.
I think we'll sit here in August and we'll make a decision who's right.
You know what?
We're going back to this tape.
I mean, no gold will be higher.
That's okay. If I'm wrong, I'm wrong. You know what? I'll evolve.
There are whispers out. I don't know, 6 months ago, so maybe a little longer. Alan Greenspan said, where they asked the question to Alan Greenspan, now the godfather of the Fed, where's gold going to be? And he goes, within 5 years, measurably higher. So he didn't say anything, measurably higher. Now there are whispers, these are just whispers, that around Washington, that he's going in, he's talking to different media people and stuff, and they can't say it. But they said, what do you think? What do you like? Just like we're asking here, what do you like? Do you want Canadians? Do you want Mexico, South America? What do you like? European? And he said, just buy gold. And they said, okay, where? He goes, it doesn't matter, any price. So this is in our world that we're But it's funny how someone like that, who, when he was running the show, absolutely had nothing to do with gold.
Right.
Before and after, it's an amazing thing. And so you talk about pricing in risk and pricing, now is the time to prepare, and there's nothing wrong with saying, okay, just be ready. And Steve and I 100% disagree with you when you say you can trade from the beach or whatever. Yes, you can on any given day.
You've got to remember, Dave, you're planning for the day that you need clean water and ammunition.
Not true.
I look at my P&L. I look at my P&L 10 times a day.
I get
so
it.
if I have a good hour, I'm happy.
I get it. But my point is this: at the level that you're playing at, Steve, I think you can get in and out, and you know how to handle that risk because you do that because you're a pro. You spent 30 years at this. My thought is when we've all spent the last since 2009. The gate has been wide, and we've all gone into the equity markets. We've all gone into bonds. I mean, the gate was very wide. When it's time to leave that trade. It's a very narrow exit. It's a very small door, and somebody yelled fire, and you're racing for that, and that place is jammed.
But it's not just
You
that as well.
can't get
Kind of like
out.
the rich man and the needle.
There's
behind
no-
the net.
The majority of professionals, I think, that are at bank desks right now trading the products that we're talking about weren't around in 2007.
Right.
Right.
Thank
So
you.
They don't remember.
They don't
very
remember.
important.
Scenario that I don't
these
think anyone's
situations.
well prepared for is if bonds and stocks both fall. And that
Thank
is
you.
the one. Everyone
Thank
seems
you.
to talk about, the
Right.
risk parity type
Right.
strategy, and even I look at it. Okay, stocks go down, but my bond should offset that.
Mm-hmm.
I'm not sure what scenario re-triggers where stocks and bonds move together and they're both moving down. That happened in the fall. It happened actually in March, I believe, of this year. That is the one scenario I don't think anyone's very well prepared. That bond yields go higher and that drags stocks down. Where does the liquidity come if people have to sell both?
I'd like to talk. I think that since 2009, there's been tremendous advances in technologies, on exchanges, everything. Well, that has hollowed out the substructure, the infrastructure of the financial industry. And I don't think, in any bull market, there is always a seller. He's just up a little higher. He's just up a little higher, maybe a lot higher.
No, you're
in a
arguing
bear
for-
market, there is not always a buyer.
You're making a
And-
valid argument for the specialist system that
Okay,
Well,
but
right.
all I'm saying is it's going to be a different game. Like Doug said, there's a lot of guys in this industry that weren't around even 10 years ago, and they have no
That's a very good
experience
point.
with this.
Very good point. Now, in the time left, give me best idea if you're watching, and it's got to be an idea that lasts for the week. Okay, we'll do it kind of like what my buddy Judge Watner does. Something that doesn't have to be done today because that's a real gun to your head, but something that you just say, you know what, this is kind of what I want to put on right here.
if Caterpillar goes down to, let's say, around 98 to 98 and a quarter, I would like to buy Caterpillar.
Yeah,
I would
they-
like a second swing at that pitch because I missed that pitch.
You're right. One of their distributors this morning came out with some very, very good
I
numbers.
mean, they showed a lot. Their earnings were good. The
Yes,
story
Cummins was good, too.
It's stalled. It's coming in a little bit. It's trading
Shorts are
around
pushing.
par. I think I get a chance to buy this. I do.
I like that.
Actually, gold is down where we like it, but to throw a little curveball in here, silver's gotten really beaten up, more so than gold with this latest move. And I think that if you're going to do something in the next week to 2 weeks, buy a little silver and enjoy that ride, because I think it's
Buy it, store it.
Buy it,
We
store
don't
it,
wanna
even-
do it SOV
right.
for the small
Right.
guy, but better to buy. Obviously better to buy
because
the bars.
silver's actually very cheap right now, and I think that you'll get a nice move out of silver.
Excellent.
Just in the short term.
What I like doing now is if you still hold any high yield, I think you can sell your high yield and take some fraction of that money and put it into the MLP space. So de-risk, get out of your high yield, but put some of it back into the MLP space, which I think will benefit from all these trends we've talked about.
And we could do without too much vig, we could do an ETF of them.
Yes, and I think those ETFs are decent in both spaces. So, those are ones I don't have a problem with how the ETFs are behaving. I think they act as very good beta products.
Okay.
I think Mexico, I think that Wilbur Ross's comments yesterday were extremely significant, but they were blown off by the market because of the FBI news that came out right after that.
Right.
I think that the U.S. is pursuing a weaker dollar versus the Mexican peso. This is like for the next couple of weeks, not for over the summer, because I think it could go the other way. Certainly the next couple of weeks, I think that the U.S. will up their negotiations with NAFTA, and I think you see a nice move lower in dollar mex.
Wow. All right. Well, look, I want to thank everybody. I'm looking, frankly, for people. I mentioned that I like Alphabet, and I know it is hard for retail. But one of the things we know is that it was hard to buy Berkshire. Right? It was hard to buy Berkshire Hathaway in the 80s.
Well, they got a B stock for that.
Right. They do have a B stock now, but I want to thank Sarge Guilfoyle, who's just doing fabulous stuff for the market recon. David Yoe Williams, I'm with you more than you're with me. And I like the silver idea because there are periods where it is right. And they don't last that long. They don't last that long. People are doing fantastic stuff for fixed income, and I got to tell you, people should listen up about this MLP idea because they're all knocked down with oil and gas, even though the president is giving you a high sign on the pipes, which do better than the actual commodity. And Douglas, I just think you're right about the dollar. You've been right about the big calls. Thank you so much,
Thank you very
everybody.
much.
Thank you, Jim.